Welcome to the deep dive. Okay, so you sent over KDDI's 2024 integrated report. Huge document.
It is, yeah. Packed with detail.
Our mission today is to really, cut through it, get to the core of what KDDI is doing, where they're heading.
Exactly. Understand the strategy, the financials, how they see the future.
We want to give you the essential takeaways, kind of the quick guide without getting bogged down.
Right. So let's start with their big picture plan. This new satellite growth strategy seems key.
Yeah, I saw that phrase a lot. What's the main idea there?
Well, think of it like this. They're building everything around three pillars. You've got 5G, obviously, then generative AI, and using data for pretty much everything.
Okay, 5G, AI, data, makes sense.
Yeah.
And these orbits.
Right, the orbits. Orbit 1 is the stuff that's already growing reliably for them. So think DX, digital transformation finance, energy. That's the core now.
And orbit 2.
Orbit 2 is the next wave. Things like mobility, healthcare. The idea is these Orbit 2 areas will, mature and eventually shift into Orbit 1. It's a pipeline for growth.
That's quite a dynamic way to structure it. And they added new leadership roles, too. CDO and CSO.
Yes, Chief Digital Officer and Chief Strategy Officer. That happened back in April 2024. It's really about breaking down silos, getting different parts of the company working together on these growth areas.
Makes sense to drive that collaboration.
Exactly. And they've set a pretty ambitious target, something like 80 new business creations and R&D projects tied to this strategy.
80. Wow. Okay, let's dig into the segments. Personal services first. That's the mobile side, AO, and the others.
Primarily, yes. Brands like O, UQ Mobile, Povo, all pushing 5G, but it's not just phones anymore.
Right, they're adding more.
Yeah, they're weaving in finance, energy, and this thing they call LX Life Transformation Services. Think smart home, digital health, that sort of thing. Plus, they've got operations abroad in Myanmar and Mongolia.
How did that segment perform financially?
Well, revenue was slightly down, about 1.5% year-on-year, landing at $4,747.2 billion. Operating income took a bigger hit, down almost 16% to $740.4 billion.
Ouch. Any reasons given?
Yeah, they mentioned challenges in Myanmar, plus some costs tied to underused network equipment.
But weren't there some bright spots? I remember reading about the Money activity plan.
Absolutely. That's been a big win for them. It bundles telecom with financial services.
Yeah, it worked.
Seems like it. Over 700,000 signups in just 7 months. And the key metrics look good. Churn rate improved by about 25%, and ARPU average revenue per user went up around 10% for those customers.
So bundling keeps customers happier and spending more.
Pretty much. It shows that strategy of cross-selling into their huge mobile base is paying off. Their other financial services are growing too. Okabucom securities accounts hit 1.7 million, up 160K.
And the bank?
Ojibun Bank?
Over 6 million accounts as of April 2024. And the total transaction volume for settlement and loans was massive, 22.1 trillion. So yeah, people are using these integrated services.
Okay, that's a clear picture of personal services. What about business services?
Yeah.
They redefined this segment, right? They did. It now covers corporate DX, and business infrastructure. This is really where they're seeing strong growth.
Like what specifically?
Well, IoT is huge for them. They've got over 41.97 million connections already.
42 million.
Almost. And they're aiming for 54 million next fiscal year. That gives them the top market share in Japan.
Wow. What else?
Data centers. Their Telehouse brand is expanding new sites in Bangkok, Paris, Frankfurt. They even entered Canada.
Telehouse Canada.
Yeah.
And I saw something about renewable energy.
Yeah, that's noteworthy.
Yeah.
The centers in Europe and Thailand are running on 100% renewable energy, so sustainability is baked in there. Plus, there's digital BPO through Altius Link.
And this WAC&X platform. Sounds important.
It is. It's their big push for the AI era in the business segment. They're aiming for double-digit growth in both revenue and operating income from it.
So an AI-focused platform for businesses.
Exactly. Sort of a one-stop shop for companies wanting to accelerate digital transformation using AI and data, network support, maintenance, the whole package. It's a big bet on B2B AI solutions.
AI keeps coming up. They're putting serious money into AI data centers too, aren't they?
They are around 100 billion yen earmarked for that, specifically for GPUs, the powerful chips you need for AI.
Just building infrastructure.
Building it, yes, but also developing capability. They're working with a company called Yield AYZA to build a Japanese large language model based on open models.
So developing their own AI.
Right. It helps their own operations and lets them offer cutting-edge AI services to clients via things like WEC-on-X. It all ties back to that satellite strategy, AI, and data-driven.
Okay, strategy segments.
Hmm.
What about partnerships? The Mitsubishi and Lawson one caught my eye.
That's a really interesting one. It's about blending the digital and the physical, creating new value.
How? Like in the convenience stores?
Yeah, the real X-Tech convenience store idea. Imagine Lawson stores becoming these mini hubs. You could get remote help with your phone plan, finance, insurance, even healthcare.
All from a Lawson.
That's the vision. And maybe even using them as disaster response points, places to launch drones. With Starlink backup internet, emergency power, it leverages Lawson's footprint and KDDI's tech.
Speaking of Starlink, they have a direct partnership with SpaceX too.
They do. That's about boosting coverage, especially in tricky areas like mountains and remote islands. They've already hooked up 1,200 locations.
Mountain Nut Wi-Fi, I saw that.
Exactly. And they're even looking at direct communication between regular smartphones and Starlink satellites. That could be a game changer.
And they used it during the Noho earthquake.
They did, deployed 750 units very quickly. Shows the practical benefit for resilience. It's fundamental connectivity everywhere, supports everything else they do.
They're also working on their own core network tech, right? This all-photonic network.
Yes, APN. That's about future-proofing the network, using light for transmission all the way through. It means much higher capacity and, crucially, lower power consumption.
Which is good for handling all the data from 5G and AI, and for sustainability.
Precisely. It's a foundational piece for enabling everything else we've talked about. They also have platforms like KDDI Digital Gate and KDDI Labo to foster innovation.
So, a lot of forward momentum.
Oh.
But the report did mention some headwinds, challenges.
Definitely. It hasn't all been smooth sailing. There's ongoing pressure on mobile fees in Japan, fuel prices have been high, and the situation in Myanmar has caused problems.
And that affected their targets.
It did. They had an earnings per share growth target 1.5 times the FY19 level by FY25. They've had to push that back a year to FY26.3.
Understandable. Any other challenges?
Well, the AI infrastructure build-out isn't easy. Getting enough GPUs is a global scramble, and you have to figure out cooling and power for these things. Those are big technical hurdles.
Okay, that gives us a good sense of the strategy and the operating environment. Let's switch gears to the financials. How did FY24.3 look overall?
Well, it was a bit mixed, but mostly positive on the operational side. Operating revenue was up, hitting $5,754.0 billion.
Okay, revenue growth.
And operating income was also up, reaching $961.6 billion. EBITDA grew too, to $1,448.7 billion.
But, I sense a but.
But the bottom line, the profit attributable to owners actually went down. It landed at $637.9 billion.
So, operations doing well, but net profit fell. Why the disconnect?
It mainly came down to a couple of specific items. Growth was driven by that strong business services performance we talked about, which offset the dip in personal services.
Right.
But the net profit decrease was largely due to provisions they had to make, one related to lease receivables in Myanmar, and another for impairment and removal costs for older telecom gear.
Ah, so more like one-off hits dragging down the final profit number for the year.
Largely, yes. Important context for that decrease.
Can we look at some other key numbers? Balance sheet, cash flow.
Sure. As of March 31st, 2024, total assets were strong at $9,552.9 billion. Equity attributable to owners was $5,452.8 billion, giving them a solid equity ratio of 57.1%.
Healthy balance sheet then, cash flow.
Very healthy. Net cash from operating activities increased year on year to $1,706.5 billion. That's strong operational cash generation.
And free cash flow. That's key for investment and returns.
Also up significantly, reaching all of $1,182.6 billion. They are generating a lot of cash. Interestingly, their capital expenditures, or CapEx, also increased to $523.9 billion.
So generating more cash, but also investing more back into the business.
Exactly. Investing in those strategic areas like AI and the network upgrades we discussed. Overall, the financials show a stable company investing heavily for the future, despite those specific profit impacts last year.
That solid financial base seems crucial for everything else they want to do.
It absolutely is. The report really stresses that stability as the foundation for their whole value creation plan.
Okay, let's talk about that value creation specifically for shareholders. Dividends.
Consistent growth there. For FY24.3, the annual dividend was $140 per share. That's up 5 from the previous year.
And the payout ratio.
Pretty healthy at 46.5%, and they're not stopping there.
Planned for next year.
They plan to increase it again by 5 to $145 per share for FY25.3. If they hit that, it'll be 23 straight years of dividend increases.
23 years. That's a strong track record. What about share buybacks?
Also very active there. In FY 24.3, they bought back $300 billion worth of their own stock.
300 billion. That's significant.
It is, and it follows big buybacks in previous years too. 200 billion in FY 23.3, another 200 billion in FY 22.3.
So it's a clear strategy. Grow the dividend steadily and use buybacks to return further capital and boost efficiency.
Exactly. Balancing that sustainable growth with shareholder returns seems to be a core principle for them.
All right, so pulling this all together, based on this deep dive, how do we assess KDDI moving forward? What's the outlook?
Well, several things stand out. Their focus on sustainability seems genuine, tied back to their founding ideas. They clearly see telecom now as critical social infrastructure, especially as AI and data become embedded.
And they're playing the long game.
Seems so. Extending their midterm strategy out to FY 26.3 shows they're not just thinking year to year. And their focus on human resources first suggests they know talent is key for all this innovation.
So the core strategy is?
It really boils down to leveraging 5G, AI, and data effectively, pushing hard into those Orbit 1 and 2 growth areas, and using partnerships strategically to build a wider ecosystem.
Balancing business growth and social value.
That seems to be the aim. Obviously, challenges exist, but that strong financial base gives them room to maneuver and invest in these big bets on the future.
This has been really insightful. We've covered the new satellite growth strategy, the performance across personal and business services, the key financials, and their commitment to shareholders. It's clear KDDI sees its future well beyond just being a phone company.
Absolutely. Their investments in AI, the network, and these diverse partnerships, they're definitely positioning themselves for a very different digital landscape.
Which brings us to a final thought for you listening. When you look at KDDI's big bets on technologies like AI and their web of partnerships, what kind of unexpected disruptions or maybe even totally new opportunities could emerge for them down the line? Something to chew on regarding the long-term implications of their path.
Definitely worth considering.
Thanks for diving deep with us today.